Hey family, in today's video, we are going to be looking at an example of a couple that is married filing jointly for their taxes, okay? So this is usually the most popular W-4 video each year just because there are so many married couples who end up owing the IRS when they go to file their taxes because they don't understand how to correctly fill out Form W-4. So, in today's example, we are going to look at a couple who's married filing jointly, and they also have dependents, and they also need to have additional income withheld. Okay, so buckle up, get your pen and paper, and follow along as we go through looking at these W-4s. Now, in this example, we will look at both spouses. So, we have Andre Johnson, who is the husband in this example, and his wife, Rainbow Johnson. Now, if you know who Dre and Bo are, let me know down in the comments, all right? And if this is your first time visiting the channel, my name is Timalyn Bowens, and I am America's favorite EA. So I do own an accounting firm, an EA firm in Louisville, Kentucky, Bowens Tax Solutions, but I'm on a personal mission to fill the tax literacy gap one taxpayer at a time, and that's why I do videos like these to help you avoid owing the IRS. So let's get right into it with Andre, okay? So, step one, we want to make sure that we have his information as it appears on his social security card. And we also want to make sure that we have the most up-to-date address, okay? Because when the employer goes to file the W-2s in January, we want to make sure that you actually get your W-2. So we have first name Andre, no initial, last name Johnson, and he lives at 1235 Anderson Drive, and he's in Sherman Oaks, California, zip code 91403. All right. So again, this needs to be your government name that's on your social security card that will also be on your tax return. That's why we don't have Dre Johnson. We have his full name, Andre. Next, for B, we have the social security number. In this example, that's 403-435587. We are going to check the box for married filing jointly, okay? And then I want to give the disclaimer that people often overlook. There is an IRS withholding calculator, and this year I'm going to actually do a video covering how to use it. But if you want a more exact number versus a guesstimate of what to put on your W-4, excuse me, you can actually use this calculator to do that and to help you complete steps 2 through 4. Okay. Now, if Andre was married filing jointly and his spouse did not work, he could fill out this information, skip box 2, put the dependents, right? So here I'll go over how we got this for other dependents. In this example, he's claiming the oldest two, they're over 17. So he only has 1,000 because we have 500 for each dependent. So this total is going to be 1,000. Let's say he has $500 in interest that will be reported this year. And then he itemizes. So we have 56,000. And then if his spouse did not work, this would actually be empty, okay? Because we don't need the extra withholding. And then he would sign, date it, and turn it in to his employer. But for the example we're doing, he's going to need a little bit withheld, okay? So let's go back up to the top. And something else you can do if both spouses earn the same amount of money or close to the same amount of money, instead of filling out for extra withholding, you could just check this box right here, sign and date. But that's not the case for most families. If it is, by all means, please check the box. So Andre would check it, Rainbow would check it, they'd both sign and date, and we'd be fine and dandy. But like I said, that's not the case for most people. So let's go back to Andre. In this scenario, Rainbow is going to earn 250,000, okay? And then Andre is going to earn 150,000 a year to make up gross income of 400,000. So here is step 3 where we claim our dependents. If your total income will be 200,000 or less, or 400,000 or less if married filing jointly, that's them. Then we want to fill out 3A, B, okay, and then add them up. Now, in this situation, the Johnson household has 5 children. They have their oldest daughter, Zoe, who's away at college. They have Junior, who's just graduating and headed to college. Then they have a set of twins, and then they have a baby, okay? So it's 5 children total. What Andre and Rainbow have decided is that since Rainbow pays for the health insurance through her check and has more deductions there, that she'll claim the 3 youngest under 17 and that Andre will claim the 2 oldest. Now, check this out. There's no right or wrong for who gets to claim the dependents on their W-4. You just want to make sure that you and your spouse aren't both claiming them, because if you both claim them, you'll be under withheld, because when you have your dependent on your W-4, it's letting the W-4 formula know, hey, here's additional money that I won't have to pay because this child is going to be credited towards that amount. So if both of you do it, but you're filing on the same tax return, we'll end up with not enough money withheld. Okay. So because Andre's taking the oldest 2, again, they're over the age of 16. I kept saying 17. I'm sorry. They're over the age of 16. So they get the other dependent credit, which is $500 for each of them. That's why we have the 1,000 here. Okay. He's not claiming any of the ones under 17, so this is blank. Then we're going to total this at 1,000. Now, let's go to Rainbow's W-4. Remember, they have the twins, and then they also have the baby. So this year, the child tax credit went up by $200 per child from 2,000 to 2,200. So we are going to take that 2,200 and multiply it by 3. Okay? So 2,200 for each child. So we have the 6,600 here. Rainbow is not claiming the dependents that are over the age of 16, so this is blank for her. And then we're going to have 6,600. Now, do Rainbow and Andre pay for more than half of the support of Andre's parents? Most likely, that is something that you can claim parents if you provide more than half of their support. However, I'll let you handle that with your parent. Okay. If you were claiming a parent or a totally or permanently disabled child or sibling that you take care of, they would not qualify for this $2,200 credit. They would be another dependent as well. Okay. So let's go back to Andre. We've done step 3 with claiming the dependents. And this is where communication is key again, because you want to make sure that you don't both have the children on your W-4s, not the same children anyway. So Andre, we're going to say he's expecting $500 in interest from an account that's just his. Cool beans. So we're going to add that on the W-4. So that extra $500 is also accounted for when it comes to withholding. Now, here with the deductions for B, if you don't qualify to itemized deductions and you don't have things like an HSA or student loan interest, you can skip 4B, okay? However, if you don't want the government to have more of your money throughout the year, you can add the deductions that you'll be taking on your tax return here in 4B so that they're not hanging on to that money and you end up getting a bigger refund. Okay? Now listen, if you put a number right here in 4B, you will have less money withheld because it's accounting for deductions that you're going to have on your tax return. Now, there's a worksheet on page 4 of the W-4 packet to help you figure out what should go on 4B. Do not put a number here if you don't have deductions in addition to the standard deduction, okay? Now, if you skip the line, it'll figure in the formula that you're going to be taking the standard deduction. With Rainbow and Andre, they live in California, so they have so much state and local tax that they pay, which that cap just went up from 10,000 to 40. And they give to charities, so they're going to be able to itemize, and that's why we're going to go look at the worksheet on page 4. Now you'll notice they're taking the same deductions on their tax return, so we have the 56,000 here. And we're going to also have it on rainbows. This is because we have the itemized deductions taken into account here. If one of you as a spouse has something that other does not, you won't want this number to match. So for example, if Rainbow also contributed to an HSA, then that would only be on hers. That would not be on Andre's. Now, as I'm walking that through my head, charge my head, not my heart. Another disclaimer, this is for educational purposes only. For your specific situation, make sure you talk with your tax professional. I do believe that I just said that wrong though, because if it is an HSA, you'd be cool. There are certain things that are going to be phased out based on income, such as student loan interest and that kind of thing. So you'd want to make sure that you don't go over the amount that's allowed on each one. Okay? Sorry for any confusion that that statement just caused. We're going to go to page 4 so you can see the different deductions that are eligible to go on 4B. Okay? So this is the deductions worksheet. So Andre does not qualify for qualified tips. He's not eligible for qualified overtime compensation. He did not buy a new vehicle in 2025, so he doesn't qualify for the vehicle loan interest. So these would all be zeros. We have another zero here. He is not over the age of 65, and neither is Rainbow. So we don't fill out 3A or 3B. So 4 is 0. Student loans are paid off. Awesome. But even with their income, it would be phased out if they did pay student loan interest. So we're not going to have anything here with 5. That's also 0. Medical and dental expenses, they did have, but they don't have enough to be able to itemize them because you can only deduct the amount that's over 7.5% of your adjusted gross income. Okay. So when we get here to state and local taxes, remember they live in California. If you're not familiar, taxes are crazy high out there. They are married filing jointly, so the max that they can have here is 40,400. They actually paid more than that, but since 40,400 is the max, we have that here. And remember, that is state and local taxes, and we're also with that looking at property tax as well. Okay? So then we have 6C. This is the home mortgage interest. They paid 15,000. We have gifts to charity. New for this year, there is a floor similar to the medical expenses. We can only deduct contributions that are over 0.5% of the total income. So for them, that amount is 20,600, and they have no other itemized deductions. So When we add up all of those, we have $56,000. Okay? Excuse me. And you see that the spouses is going to match that. Okay? Sorry, I'm here. So then we're going to enter the total income. Okay? And then we're going to subtract line 4 from line 8. There's nothing in 4, so 400,000 minus 0 is 400,000. Last I checked. Line 9, we are going to enter the $768,700 because they're married filing jointly, right? So then when we go to line 10, if line 9, right here, is greater than 8B, enter the amount from 7, right? So that is the case. So we have our 56,000 here. We are not taking the standard deduction, so we get to skip this. We're going to skip this as well because this is cash gifts to charities if using the standard deduction. Nothing in 11 and 12, so that's 0. And then if line 10 is greater than 13, subtract 11 from 10. So when we look at that, 10 is greater than 13. So we're going to subtract line 11, which has 0, from 56, and we get the 56,000. So when we add lines 2, 4, 5, and 14, we still get this 56,000. And that's why that is the number that is going to go here for 4B. Okay? So the other adjustments, line 4B for deductions, is a little crazy this year. I hope you're able to follow me with that. The extra withholding. The reason we need the extra withholding is that because Andre's job is not going to take into account Rainbow's job, and Rainbow's job is not going to take into account Andre's job. On the tax return, we're going to be combining their incomes, which means more of their income is going to be taxed at a higher rate. That is why we have the extra withholding to take account for that. Now, this is making the assumption that they got their W-4s in to their employers at the beginning of the year. So here we have Rainbow, okay? Remember, she's making $250,000 a year, and then we have Andre who is making $150,000 a year. So we are going to go to the tables here. We're going to look at married filing jointly or qualifying surviving spouse. Now, this is going to be our higher paying job, the annual wage and salary, and then this is going to be the lower paying job. Now, if you've been watching me for a while, you already know my joke here. This is why we learn how to do algebra. So we're going to go down and find the 250,000. So that's here. Now we're going to go find 150,000, and you'll notice that this doesn't go out to 150,000. That's okay. We're still going to go down and see where it intersects with Bo. And if you see here, this range is 240,000 to 319,999. That's going to still capture the amount that we don't have here for Andre. Okay. So the number that we have is this 18,580. Now, the amount that you put on 4C is the amount that you'd like withheld for each paycheck. So we're not going to put that 18,000 and 18,580 here. Okay. Instead, we would take the 18,580 and divide that by 26. Okay. Now, that number is going to be $714.62. With that being said, sometimes couples decide that they want the higher paid spouse to take the whole thing, right? But in some families where it's all coming out of the same pot anyway, they decide that they're going to split it. So, what Andre and Rainbow have decided is that they're going to split that $714.62 between each other. So that's why we have $357. So if we go to Andre's, let's go back up to page one. We're going to also have this 357. Now the reason for that is because each pay period, so remember they got this in at the beginning of the year, so they have 26 pay periods, an additional $357 will be withheld to make up for that 18,580 that would be under. Okay? Now, somebody in the comments is going to ask me, how do I go exempt? If you had a tax liability last year, you are not eligible to go to exempt. But go ahead at your own risk. You would fill out this information, not fill out any of this, and you would check this box. But please note, when you check the box, you were saying that you meet both of the conditions for exemption for 2026, which are you did not have a tax liability last year and you don't anticipate to have one for this year. Okay? Then you would sign, date, and turn it in. But if you had a tax liability last year, and if you were making around the same amount of money this year, you'll have a tax liability this year. So I would urge you not to go exempt. All right? Now, that's it for this video. If you found it helpful, if you know who Dre and Bo are, let me know down in the comments. Caring is sharing. And when you share this video, you not only help your friends and family, but you help me on my personal mission to fill the tax literacy gap. All right? I will see you guys in the next video.